Look around the world and there is a compounding effect. One country begins to fall and the others follow suit. It seems as though we are late in the cycle as the behavior is becoming more erratic and exaggerated. Sadly, most are unaware of what happens in the world and trust that those managing everything have their best interests in mind. Nothing could be further from the truth. And that's why you came here for the truth, so let me unveil that for you. Today we are going to look at the global economic slowdown that is happening. I want to also look at the markets. I want to talk about what has been occurring that isn't getting the front page in many aspects here. But let's start with the markets and we'll show you how that really connects all together. Here you can see what happened in the markets. It was up and down today on Monday's trading session, but ultimately the Nasdaq really took a beating because of the big tech companies and the worries about all the new regulations and the scrutiny that would come to this largely unregulated market. So this right here shows us where the biggest companies, the most successful companies, those that have been at the top, the trillion-dollar companies, have now taken a beating and are suffering as a result. In fact, the Nasdaq is in correction territory. Nasdaq drops more than 1%, enters correction territory as regulation fears batter big tech. So this has been an issue that we've been talking about for a little while. It's down more than 1% in the day, but when you look at it from the peak, over 8,000, now down 10%. Why China's rare earths threat is no game changer in the trade dispute with the United States. This is actually some interesting information. We've been covering it for a little while. China has threatened to stop exporting rare earth minerals found in a wide range of everyday consumer electronics to the US. But the important point here is that the US is not a big maker of technology products, so cutting off rare earth exports to American manufacturers would have a limited impact. So they have to do this in a way, as I mentioned on the other video a few days back, they can't necessarily just say we're going to ban rare earth minerals. They have to do it in a different way that will actually impact the products that are shipped over to the United States. I'm not sure if they can do that. So we'll see how this one plays out. Investors may be about to get further confirmation that they have misread how deep and lasting the global trade issues can be. Investors are generally of the view that the trade dispute could drag on for longer, but they appear to be overlooking its potential impact on the global macro outlook. If trade tensions continue to escalate, the global cycle will be at risk. We could end up in a recession in 3 quarters. You heard me talk about this, Morgan Stanley, on the previous video, but now it's starting to actually come out there in some limited form. You've seen what's happened to the bond market, and it really is sending a signal to individuals out there to wake up and smell the roses. JP Morgan sees the 10-year yield falling to 1.75% as the trade tensions push the Fed to cut. We've also looked at this primarily related to what has happened with the stock market. The Federal Reserve is there, in fact, to manipulate the stock market, the bond market, and real estate, and they do so at their own will. Their desire, they do it when they feel the need to. They increase liquidity, they dry up liquidity, and they don't seem to have the average individual in mind because they create the boom and bust cycle that people have been so used to, and unfortunately it is very unnatural to have this occur, such exaggerated rise and fall that people have been accustomed to time and time again. This under-the-radar freight indicator is raising concerns that the U.S. economy is slowing. I've shown you the Cass Freight Index before, but this is a problem that is continuing. It's a broad measure of freight shipments. It fell 3.2% year over year in April. The April report outlined a material and growing downside risk to the economic outlook. This is something that should be apparent to the average person if you are paying attention. And I know if you're somebody who watches this channel, you are paying attention. While we have seen many data points in the past month supporting our view for earnings, recession, and economic slowdown, none were as convincing as the Cass Freight Index report for April. So let's take a look at it. Shipments slow down. You could see the Cass Freight Index in terms of shipments, and obviously through this period of time, 2018 into 2019, it has declined significantly. On the left hand side, percent change from 1 year ago. So we're getting these numbers that are just month after month falling lower and lower. This is really telling when you look at it. This also is in conjunction with that transport stocks 1 month performance. You could see several of them declining at different rates, of course, but it just shows you that the market isn't doing well in this regard. That spills over into this information out of Bloomberg. The US Manufacturing Purchasing Managers Index, the PMI, fell by more than 2 points to 50.5 in May, the lowest level since September 2009. How many different factors are we at today that are back to the financial crisis? My goodness. That's why I call it the financial crisis part 2, because we're simply back to where we began. It's like a continuation. New orders contracted for the first time since August 2009. The overall index has fallen by almost 6 points over the past year. Of course, this is going to have an impact on the GDP numbers, but we are seeing positivity in the GDP somehow, some way, even though always getting revised downward. People don't look at the revisions, they only look at the original number that gets put out there. So this will tell us where we are actually headed, but you got to be looking at the details. Factory slump, European manufacturing industry remains in a weakened state. Just looking at the German manufacturing PMI as well as the UK, both of these have come down as of late. Asia exporters are under pressure. You can look around Asia, Japan, Philippines, Vietnam, so on. All of these countries here are affected by what we are seeing, not just with China, but with their own issues as well. So this chart is just depicting some of that. And last but not least, global manufacturing took another knock last month from trade tensions, adding to concerns that the world economy is weakening. The latest signs of factory weakness, including South Korea, Germany, and Japan, underscore the growing threat to the world economy posed by the escalating US-China trade issues. As I said, this has to do with what we are seeing there, but it goes beyond that. The reports came amid a fresh warning from Wall Street about recession risks. Typically, this is found with the yield curve, as you have seen, very dramatic decline in the yields right now, and this has been a real warning signal to those who are paying attention to the algorithms, to the traders. They're looking at that, I assure you. I'm planning on doing a video about what's going on with the yield curve. I'm going to look at Deutsche Bank. I'm going to talk about JP Morgan. I have a lot of information in a future video. Perhaps I will do it tomorrow. We'll see. I just wanted to give you this information for now, and then I'll bring that to you later. That's all for this video. If you found it informative, please give me a thumbs up. When you give me a like on this video, you're supporting me and this channel, so I do appreciate that very much. If you want the financial education you were not taught in school, these 2 books have everything you need, all the details related to bonds, stocks, every type of assets. All of the information you need to know is at the link in the description. Click on it and it will bring you over to Amazon. Then if you want the audiobook, you can get that at themoneygps.com. If you want to know what's going on in the global economy, then you have to watch this video. If you haven't watched it already, definitely click on it and I will see you there.